Warren Buffett just made some absolutely unbelievable moves in regards to his portfolio. I want to run you through some of the stocks Warren Buffett's buying and selling here, okay? Some of the decisions I think are a little strange, we'll call it that, okay? And I want to take you through exactly what's going on here, kind of my opinions, perspectives on this, what Buffett's up to here, what Buffett might be thinking, and those sorts of things. So I appreciate everybody joining me as always. Warren Buffett, I can genuinely say, if it wasn't for that man, there's probably a very low probability I'm in front of you today, because I remember looking into the stock market and still trying to figure out, is this something I want to do? And I just remember finding Warren Buffett and going down that Warren Buffett rabbit hole on how he thinks about building out portfolios and how he thinks about investing in general and what he looks for in companies. And it was a game changer for me for life. And I doubt I'm in front of you today if it's not for Warren Buffett and kind of what he's proven over time and what he's been able to build out. But with that being said, I do not necessarily agree with all the decisions he makes and Berkshire Hathaway makes. They're not perfect, obviously, right? They make their mistakes. Warren Buffett's made a lot of mistakes over the years, but you know what he's made a heck of a lot more of? Money and success, right? And that's all that counts at the end of the day. If you're in business for 50, 60 years, you're going to have some screw-ups. You're going to make some mistakes, some big mistakes, some billion-dollar, multi-billion-dollar mistakes. But if you're a great business person, you're going to make a whole lot more successes than failures. And while people laugh at your failures, you're reaping the rewards of massive successes you've had over time, okay? So don't ever let a failure get you down when you're in business and investing. That's just part of the process, man. That's just the cost of doing business, as they say. I appreciate y'all joining me, as always. Thanks for being subscribed. Now, one super important thing I covered before we get into all the stocks he's buying and selling and my opinions on those is you have to understand this about Berkshire Hathaway and Warren Buffett. Back in the day, if there was a buy or a sell in Berkshire Hathaway, it was coming from one man. His name is Warren Buffett. Today, things are different, okay? Let me show you this. There's two gentlemen named Todd and Ted. And these gentlemen have been helping Warren Buffett run money for several years now at this point in time. Many years now at this point in time, okay? And Todd and Ted can sometimes, they come from kind of more of the hedge fund world. Sometimes they can do more trades. So sometimes you see Berkshire buy a small position in a stock, and small is a relative term. For almost anybody else, it'd be huge, but for Berkshire, it's a small position. And then sometimes they'll sell it off a year later, 2 years later, 3 years later, and it's like, Warren Buffett's supposed to be the buy and hold guy forever. But many times these moves are coming from Todd and Ted. And Warren Buffett's gone on record, and he said, Todd and Ted, they'll buy things that I wouldn't buy. And I'll buy stocks that they wouldn't buy, okay? And so do keep in mind, we never 100% for sure know where some of these buys or sells are really coming from. Is it coming from Buffett, or is it coming from Todd or Ted, okay? Alrighty, guys, so let's get into this, okay? First place I want to start here is they're buying their own shares back, a lot of their own shares, okay? In Q2 2023, Berkshire Hathaway repurchased nearly 4 million Class B equivalent shares for a total outlay of about $1.3 billion. The pace of repurchases came down substantially from the $4.4 billion figure last quarter. Now, that's telling in itself. That basically shows that Buffett likely doesn't like the price he's paying for Berkshire Hathaway nearly as much this past quarter as he did the previous quarter, right? If you're going to slow down your buyback that substantially, that's not a small slowdown. That means you're looking at the stock and you're saying we're priced a little bit richer now. It's not quite as good of a deal, right? The average price paid was $333 of book value as of Q2 2023, was $252 per share, right? So that was the average price paid, but the book value was that, right? So the repurchase happened at 132% of book value in July, so which might seem like they're buying at expensive prices, right? In July 2018, Berkshire had announced a plan to make the repurchase criteria more flexible instead of the 120% of book value criteria. Buffett and Munger had agreed that Berkshire was trading below intrinsic value, that Class B shares currently trade at $359, okay? Now, what do I think about Berkshire buying their own shares back? I think it's an okay buy. I don't think they're necessarily buying at a super underpriced valuation. I don't think they're buying at a super overvalued valuation, and certainly where the stock was trading last quarter. I think it's an okay buy. I have no problems with that, to be quite honest. If Berkshire explodes higher over this next 6 months, I think they should cut that share repurchase down considerably more, and maybe even to zero if it really climbs substantially. But I think for now, some of those share repurchases are just fine, okay? Now, what about some stocks they sold completely out of? And then we'll talk about stocks they didn't make any moves with, and then we'll talk about stocks they're buying that I have some question marks. So first one up here, McKesson, which is more of a healthcare related name, they basically got completely out of this stock. Now, I don't, if you know me, I don't really talk much or cover the healthcare related stocks, right? But there is something very interesting that I see here with this McKesson stock, okay? Let me show you this. So this stock trades at what looks like a pretty cheap forward P for something healthcare related, 16, 14. That's not very high at all. So seeing a move like that, I don't know if that's really Buffett selling that stock, because this almost seems more like a Buffett stock you'd want to be in for the long term, healthcare related. Healthcare is a needs based, right? Seems perfect for Buffett. It's not really going to go through the crazy ups and downs. A fairly low forward PE, right? That seems like a perfect Buffett stock. So I don't know what's going on there. Very strange to see that one kind of sold out of. It seems like a perfect Buffett stock, to be quite frank. Maybe that's a Todd and Ted move. Now, this definitely, like 98% probability, is Warren Buffett doing this, okay? Stake decreases. So they sold some Chevron shares. Chevron is a large top 5.56% of the portfolio. That's a huge position. Purchased in Q3 of 2020 at prices of $72.91. Q1 2021 saw a 50% selling at prices between $85 and $112. While in Q3 2021, there was a 25% stake increase between the price of $94 and $106. I mean, I don't know. I think it's kind of weird, like some of the selling and then buying and selling and buying and those sorts of things. But at the end of the day, this is such a massive position. This has to be Buffett. It's just strange about kind of some of the moves there. That was followed by another 1/3 increase next quarter at prices between $102 and $119. Q1 2022 saw a whopping 315% stake increase at prices between $119 and $171. The last quarter saw a 20% reduction at prices between $152 and $188. That was followed by 7% trimming this quarter. The stock currently trades at 164, okay? Now, Buffett's not usually known as a trader, right? He's usually looked at as a long-term investor and somebody that buys stocks for the next 10, 20 life, okay? But something I will tell you I've noticed with Buffett in regards to energy stocks specifically, I have seen him trade these stocks before in terms of decreasing, increase in position, kind of trading around a little bit, even getting out of complete positions. This goes all the way back to when I was very early in the stock market. I remember finding a video on YouTube about Warren Buffett selling out of a company named PetroChina, which was kind of a nationalized big oil company and gas company in China. And they made a lot of money on that position, let's just call it that. And he was just like, I'm taking my profits and I'm running out of this one. And so do keep that in mind. It does seem like if there is anything Buffett feels a little more comfortable timing in and out of a little bit more, it seems like oil and gas stocks. Now, the interesting thing was Chevron, right? And you guys know, certainly, I'm not the biggest oil and gas. I don't even own any oil and gas stocks, right? It's not my whole cup of tea. But it's interesting because Chevron obviously trades at very low forward Ps. So, I don't know. Like I said, maybe Buffett wants to be a little bit more of an in-and-out trader when it comes to sometimes these oil and gas stocks, okay? Now, next stock, he sold out of completely. I'm not surprised by this one, to be quite frank, okay? And that stock is Activision Blizzard. He sold out of Activision Blizzard, right? So Activision, 0.35% of the portfolio established in Q4 2021 at prices between $57 and $81. Next quarter, the stake got increased by 340% between $63 and $82. There was a 1/3 reduction over the last 3 quarters. That was followed by a 70% reduction this quarter. Stock currently trades at 91. This was just an easy, buy. Just an easy buy for Buffett. Kind of almost more of a trade again there, right? In regards to kind of Activision Blizzard, the Microsoft deal and all that, definitely helped their prospects out, and a huge arbitrage play here. And at the end of the day, if everything goes through there, it makes sense to just cash and move on and move that money somewhere else. So good work, okay. GM, so GM is 0.24%. 13F portfolio position. It was first purchased in 2012 at prices between $21 and $30, which just shows you that GM literally hasn't done anything in 10 plus years. Like, that's insane to think he was buying the stock between $21 and $30, right? Back over a decade ago. By Q3 2017, the position size had increased by around 6 times. Q4 2017 saw a reduction, and he's been, boom, 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 all over the place, right? The stock currently trades at $31, or the cost basis, on GM is $31. The stock trades at 34, so not much above, right? So this has kind of been a huge dog stock for Buffett over time, just to be quite frank. I mean, GM has been stagnant. Now, the one thing I'll say about GM, I don't own GM stock, but I gotta stick up for it a little bit. It trades so dang cheap. Forward P on the stock's in the 4 range. If cruise automation ever is a big thing for them, that's not even priced in the stock whatsoever, obviously, right? The issue with GM is they're obviously having to shift their business toward electric vehicles, which is a whole shift you have to go through. That's not easy. And then simultaneously, they're having to shift their business to obviously the future, which is going to be humans not driving the cars, the car driving the car, right? And so that's a whole process to go through, and that was behind the whole cruise automation purchase years ago and things like that. So it's a tough battle. I don't think GM is a bad buy. It's certainly, once again, not my cup of tea, but I don't think it's a bad buy. The risk reward's pretty somewhat interesting because the stock trades so cheap. Now, on the flip side, interest rates are super high right now. They're going to probably remain high here for a bit of time. That's not good for the obviously the auto sector. And then if the Fed starts lowering rates, it's likely because we're going into recession. And recession is not good for automakers either. So that's the problem with GM is, although it trades really dang cheap, it's in a really, really tough position on several different fronts, right? You got going to electric vehicles, you got cars driving cars instead of humans driving cars, you got interest rate environment, you got the potential of recession. All that stuff is not good for GM, right? Now, some interesting moves they made here in terms of they didn't add or subtract, right? Apple and Bank of America, both of those stocks, they seem to not really make any move in regards to that, which shows Buffett's belief in Apple that this is just a business that he just wants to hold long term. He doesn't want to make any rash judgments in regards to Apple up or down, right? American Express, Coca-Cola, those ones don't come as any surprise to me in terms of, kind of holding steady there. I would be really surprised if he didn't make any big moves in regards to American Express or Coca-Cola. Same thing with Kraft Heinz, Moody's. Now, 2 stocks specifically he didn't add to, and I'm extremely surprised because I really thought they would have added to these 2 stocks specifically, or these 2 stocks. One is Amazon stock. They didn't really do anything there. They established a stake in Q1 of 2019 at between $75 and $91, right? And then they increased this by 11% the next quarter between 85 and 98. I'm very surprised that in Q1 they didn't add to Amazon, and in Q2 they didn't add to Amazon. I really think they should have. I just think Buffett has trouble getting over the P/E ratio of Amazon, and the fact that you have to pay up for a stock like this that has the sort of growth this company has and has the sort of potential this does long term, right? And the other one I'm even more surprised he hasn't added to this one considerably is Ally Financial. Now, it could be because they already are a big owner of Ally. Maybe that has something to do with it, right? But when I think about Ally, it seems like this should be the perfect time for Buffett to add to the stake considerably more because Ally is perfectly positioned. The great thing with Ally Bank is anytime interest rates are in an elevated place, savings accounts start yielding really high for Ally. And so Ally is able to attract a lot of deposits, a lot of money to Ally Bank because Ally Banks is one of the most famous savings account companies and CD account companies. Like if you're in a higher interest rate environment, you go to Ally Bank. It's known for that, right? SoFi is starting to make a name in that space as well, which is good for any SoFi shareholders that are watching this. But Ally's always been that player. So people move money out of a Bank of America, a JP Morgan, a Wells Fargo, places like the big traditional banks that they might do their checking accounts with, and they move that money over to Ally to get to the savings account rates because you're not going to get crap from those big traditional banks in regards to great savings rates. Ally, you can get 4 to 5% on savings accounts, CD accounts. I think they're even offering like it's either them or SoFi is offering 4.55 on a no penalty CD. So meaning essentially you could even pull the money out before you're supposed to pull the money out. Like let's say it's a 9-month CD or something like that. Like that's pretty fascinating that you can do that, right? And so, but like I said, it could be something in regards to, them already having, maybe they don't want to go over 10% ownership. That's my guess in regards to that. Ally Bank, by the way, I don't personally own it, but if you told me I had to buy a financial outside of JP Morgan, I might actually be inclined to buy Ally, to be honest. Then after that, maybe a Goldman Sachs, and maybe after that, maybe somebody like a SoFi or something like that, okay? Now, in regards to the stocks he bought, I'll be honest, I have some issues with these stocks in my personal opinion, and I'll share what those things are. Now, once again, we don't know if this is Buffett buying these stocks or if this is Todd or Ted buying these stocks. I almost want to put it on Todd or Ted more than Buffett because I think this is too questionable of a decision for Buffett to do at this stage in the market cycle. I'm not really so convinced this is Warren Buffett. I think this is more of a Todd or Ted move, okay? So, in total, Berkshire bought 5,969,000 shares of D.R. Horton, 152,000 plus shares of Lennar, and 11,000 shares of NVR. Those shares are worth $800 million, with more than $700 million of it being in D.R. Horton, okay? Whoo! So I have issues with this, okay? I'm having trouble thinking this is actually a Buffett move, okay? I think this is Todd or Ted. Let me go through my list of issues in regards to this, and it's substantial, okay? One is these home builders have been on a hell of a run, okay? You know, the home builders got set up in a kind of a perfect situation. Real estate prices obviously skyrocketed. You had very low interest rates for a long time there. Then no one wanted to move because they were locked in at very low interest rates, right? And you have unemployment rate at under 4%. You know, you put all those together and it's kind of like the perfect combo for these home builders, and their stock price have thrived. Their stock price have pretty much all gone to all-time highs very recently. All-time highs. Not 52-week highs, not like 3-year highs. All-time highs, okay? Now, these stocks have far outpaced many other stocks in the market, including the S&P 500 recently, but there's a lot of issues here, okay? And I mean a lot of issues. So first off, on surface level, you look at stocks like D.R. Horton, it looks like, oh, there's nothing bad here, nothing bad going on, right? You know, they're supposed to grow their EPS, low forward P. Oh, that looks all fine, you know, looks all great, right? You look at a stock like Lennar, oh, they're growing their EPS over the next few years, expected to, oh, really low forward Ps. It all looks great until you take into account that that might not happen. And this industry is extremely cyclical, okay? Extremely cyclical, okay? First off, interest rates are sky high right now, right? You're looking at a 30-year mortgage of 7+%. And that's if you got great credit right now. If you have not so great credit, you could be looking at 8-9% on a 30-year right now. It's out of control, right? And the thing is interest rates could be in a very elevated place for quite some time until the economy breaks. But at the same time, if the economy breaks, it's not going to be good for home builders. I can tell you that much. We know how that game stacks up, right? So this is something that's working against these guys in a major way, right? Home builder sentiment just broke. Now, this could be one of many, many months of breaking that could go on here, okay? Home builder sentiment dropped sharply as mortgage rates surge over 7%. Builder sentiment dropped 6 points to 50 in August, according to National Association of Home Builders. Anything over 50 is considered positive, right? So we're not even in negative territory yet when it comes to home builder sentiment. That's still likely coming, okay? The share of builders cutting price rose to 25% in August from 22% in July. Don't be surprised if that number goes up considerably, okay? So sentiment is starting to erode. Don't be surprised if it gets far worse, okay? Now, we've been building just a ridiculous amount of apartments year in and year out for years now at this point in time, right? We, you know, kind of obviously 2010, 2011, 2012, coming out of the housing bubble and the weak economy, in terms of apartments being built, dropped in a significant way. And then starting around 2013 and moving forward, obviously amount of apartments being built is booming, right? I mean, here in Vegas, it's ridiculous. It seems like there's a new apartment complex being built in every flip and flapjack and corner in this valley. It's out of control, okay? And so keep in mind, 2023 is going to be, I don't know if it's going to be a record year for apartments being built, but it's going to be damn high. Okay, really flipping flapjack and high. So you have just a ridiculous amount of supply coming onto the market, right? Simultaneously, you have a lot of homes being built over the last few years, right? So obviously back in these days, right, you had a lot of homes being built, but we had a population boom. We were letting in a lot of people into the United States back in those years, and there was a baby boom going on inside the United States of America, right? Baby boom, regeneration, all that. So you needed tons of homes to be built, right? And you had obviously the ramp up of the 30-year mortgage, which became very popular, 15-year mortgage, all those sorts of things. And so you had just, you know, an insane amount of homes being built back in those years, right? Of the 50s, 60s, 70s, into the 80s, right? Then things cooled off for many, many years, right? And then you got into the housing bubble, which no one called it the housing bubble until it went boom, right? So you never really know if you're in a housing bubble until after it goes boom, and then everybody calls it a housing bubble, right? Almost no one thought that we were in a housing bubble, other than maybe like Michael Burry and a few other people, okay? It was very few and far between. I mean, less than 0.1% of the population thought we were in some sort of housing bubble back in these years while we were building like crazy. Everybody was like, this is just normal. We need all these homes. We're undersupplied. We're undersupplied. More homes, more homes, more homes, right? And that's exactly what you hear nowadays, right? And you think about how hard it is to get population in terms of babies being born is at some of the lowest numbers we've seen in the United States history over the past 10 plus years, right? That's not great for new household formation in terms of the future generations. Two, we've made it so incredibly hard to even get into the United States of America now at this point in time. The amount of, ask anybody that's come through the United States legally and ask them about how ridiculously hard it was to get into the United States. And they will tell you, I feel lucky to even have gotten in because of how competitive it is and how hard it is to legally come into this country, right? So it seemed like there's been such a huge demand for housing, but it's from two things. One is interest rates were like on the floor for over 10 years. Literally over 10 years, mortgage rates were about the lowest we've ever seen in history, right? That's a huge. And the second part is even a bigger thing, okay, is we've had a great economy for a long damn time, okay? Since 2015, we've been in a great economy. Great economy is an economy where you have less than 5% or less unemployment rate, okay? And whenever you're lower than 5% unemployment rate, you're usually considered to be in a great economy, just jobs are booming, it's not hard to find a job. And if you lose your job for whatever reason, you can go find another job, things like that, right? And you can say, well, right here in Rona, we spiked up there for a minute, and that was not even like real unemployment because the government was paying everybody's bills. You didn't have to pay your mortgage. You didn't have to pay your rent, all that crap, okay? That was not even real. So basically, it's been like 8 years of unemployment rate truly 5% or below, right? And these, you're kind of at the end of the cycle when you're in the 3% range, especially under 4%. Like, that's just ridiculous. Anything under 4% is just insane, okay? So when you have a great employment market matched with ridiculously low interest rates, the lowest that generations had really seen, is going to create a dynamic where ridiculous amounts of homes and apartments are built. And that could definitely hurt the home builders over the next few years, in my personal opinion, in quite a substantial way. And housing moves slow. So it's not like there's going to be a magical comeback from for those home builders magically overnight. The only way they make it through this mess and don't have a 50% plus drop is if we have no recession. We'll see. I appreciate everybody joining me as always. Thanks so much for being here, folks. Thanks so much for being subscribed. Thank you, Warren Buffett, for making some moves, and Todd and Ted as well. Appreciate you guys. If you're looking to apply to join my private group, check out the pinned comment down there to fill out an application, and we'll see if you're a good fit to join us in there. Much love and have a great day.